Officer of O'Neill Global Advisors joins us now. Good morning, Randy. Thank you very much for staying up for us. Well, do you worry at all that this liquidity tap will be tightened, or do you think this is the time to go on and ride the higher wave?
Well, first of all, thanks for having me back. I hope the three of you are all well. Obviously, our thoughts and prayers are with India during this COVID surge. With regards to inflation and liquidity, I would say this. I am worried about inflation. I worry that it may not be as transitory as the Fed thinks. You know, right now, CPI is running about 2.6 in the US, and the last PPI was 4.2. So it's already running kind of above where the Fed's long-term targets are. I think the Fed is going to err on the side of caution with regards to the economy. They really want to make sure the US economy is going before they do any kind of taper or tightening. So I think they're going to let inflation run hot for at least the rest of the year. So I wouldn't expect any form of higher rates or less open market bond purchases by the Fed in the near term.
Randy, good morning. In that case, what's the view on a market like India? Because it's been a very resilient market in face of all the COVID cases. Do you still buy India?
So it's a great question, Anush. Hope you're well. I would say this. I am still worried about COVID in India. As Lata said at the beginning, the numbers the last couple of days have been better, but only about 11% of the population is fully vaccinated. I'm sorry, only 11% of the population has had one dose. Only about 3% is fully vaccinated. So I don't think we're quite out of the woods yet there. I'm worried the numbers could rise again as they did in the US, really earlier this year. So until we're farther along with vaccination, we've really seen those case counts really ramp down. Remember, with regards to testing, the positivity rate, I believe, is still about 20% in India. So it's still very, very high in terms of the positivity rate. However, long term, India is one of the best secular market stories in the globe. And once we get through this COVID pandemic, I expect there to be a lot of pent-up demand in India in terms of spending, both by the business and consumer. I expect there to be a credit expansion. And I think the long-term opportunities in the market are still very great. It's just a question of what economic growth is going to look like this fiscal year in India. Obviously, GDP and earnings estimates have been coming down. I think the market is likely to stay volatile over the next couple of months. While you mentioned we are near all-time highs, I do think it's going to be sort of a two steps forward, one step back kind of a market. And I think on those step backs, you should really be using the opportunity to try to buy leaders that you feel great about for the next several years.
Well, I think that's what the market is pricing in, right, Randy? Good morning, because we are just about 200 points away from the all-time highs. So if one had to buy a few large or mid-cap stocks right now, I do know that you track many of them very closely. What would top your list in India?
You know, I still like the banks. We talked about them last time. Even though inflation is running about 4% and interest rates are about 4%, I still think the larger, better capitalized banks like HDFC and Kotak Mahindra are well positioned. When we come out of this pandemic, there's going to be a rapid demand and expansion of credit. I think it's possible the Indian government creates a bad bank to absorb some of the non-performing assets from some of the India banks. And I think overall loan demand is going to be quite good. So I like the financials. They had lagged, last year. They're doing better this year. So I really like that sector. Another sector I continue to like, I like healthcare. I like some of the leadership stocks in that group, like Dr. Reddy and Laurus Labs, both of which make ingredients for other pharmaceuticals. We like Dr. Lau Pathlabs also in terms of the testing. So two sectors I like right now, and I like how the technical action is working in the stocks, is financials and healthcare.
Okay, Randy, can you just give us a little more color about financials now? Would you go down the line if there is going to be an improvement in loan growth and asset quality? Would you just stick with the State Bank or go down the line? Would you just stick with a Bajaj Finance or go down the line in the NBFCs?
I think, first of all, Lata, great question. I think right now, before we know if there is going to be a bad bank to take in the NPAs, And given that we're still uncertain where we are in the pandemic cycle, I would stick with the larger, better capitalized banks. I'm very confident that the balance sheets of companies like HDFC and Kotak are going to be able to handle whatever negative credits there are that emerge because of the lockdowns, which are obviously hurting small and medium business significantly. So right now, I think it's the point in the cycle where I'd still favor the larger ones. As we get closer to the end of the pandemic, I think you could move down the cap range into those mid and smaller financial names like you mentioned. But right now, I want to stay with the large ones until I get a better sense that COVID really is starting to stabilize in the country.
And one question we've been repeatedly asking you, metals.
Sure.
Last week or maybe 2-3 days, the Chinese authorities regulating their own metal market has cast a slight shade of red on metal stocks, which were, doubling and trebling their share prices for the past year. Would you still go with Tata Steel, JSW Steel, Hindalco, and the like?
I would. A couple of things there. There is definitely inflation in raw materials inputs. And there are a lot of companies that mention that on their March conference calls in India. So that is causing a bit of a margin squeeze on some manufacturing companies. I do still like the steel companies. Steel demand is likely to be up at least 6% this year globally. I think there is going to be demand both domestically once the pandemic slows down, as well as internationally in terms of exports. I do like Tata Steel. I liked their quarter. I like the fact they're accelerating their debt reduction plan. And they're also, as we've talked about before, they are integrating vertically. So I think that's still a good story. I think business is going to pick up as we move into next year as the economy reopens. Right now, lockdown is hurting some of their end customers, though their manufacturing right now is okay.
Okay, Randy, what about state-owned companies? We've had a big rally here, whether it's oil stocks or a couple of other sectors. Any names that you like in this space?
There's not a ton of state-owned names that I would want to buy right here. Because you did touch on it, we do still like some of the electric utilities. We like Adani Power and we like Tata Power. So those are two areas we like. Obviously, electricity demand in India is going to really keep growing. We also like the green energy stocks, in particular Adani there as well. I think there's going to be a major shift in India towards more renewable energy. There's going to be greatly increased electricity demand. If you look at energy consumption in India on a per capita basis, it's actually about half of what it is globally. So India is going to use a lot more energy. I think those are relatively safe stocks to play over the longer term. And the two areas I like right here are electric utilities and the renewables.
Okay, that's a lot of stocks that we discussed in a short span of time. Randy, thank you so much for joining us, and thank you for your concern about what's happening in India. Hopefully, the next time we speak, things will be much better. Let's take a quick commercial break on that note. But when we come back, lots more